Good morning, traders. It is an early episode today. This is Wednesday, the 10th of April, 2024. It's about 7:50 a.m. Chicago time. This is a pre-recorded session. I have some family events to attend to today, so I will not be around when the normal time occurs, which is about 10 minutes from now anyway. So I didn't make much headway this morning. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning we had CPI, big release, and it came in quite hot. And as a result, the market has tumbled a fair amount. We're seeing risk assets down quite a bit. So I'm going to start out. I'm not doing a pre-market summary sheet today. I'm going to start out with this image right here. This is a live updated quote board. This is our relative indications board, and it tells us how the market's doing across versus settlement. So those changes are against settlement. You can see the Russell's down 2.85% this morning, the Dow down 1.13, the S&P's down 1.26. Market's in a trend down condition. Again, the CPI release is the catalyst here. We had a very quiet market until this occurred. U.S. core CPI month on month for March came in at 0.4 versus 0.3 expected, so slightly hotter. U.S. CPI month on month came in at 0.4 versus 0.3 as well. U.S. CPI year on year came in at 3.5% versus 3.4%. So it seems that the trend towards 2% is stalling, and of course this takes the Fed into a potentially more cautious tone, and therefore reduces the potential for rate cuts as the market expects. So we went from a March cut to a June cut and then from 4 cuts to 3 cuts to now 2 cuts for the year is the predominant view. So this is, I want to pull up the Fed Fund futures or the Fed Watch tool here, but the website appears to be getting slammed, so it's not coming up for me. But that's where we stand. Note the relative range and relative volume. What you have here, unfortunately, I will not be here for this. What you have here is is really good activity, pretty decent ranges and volumes already. So this is likely to be a pretty active day, a good day to turn everything off and just keep your head in the game. So that's where I'm looking. So that's the headline news. That's the key element. Taking a look at how the market responded. This is a one tick by 6 point and figure chart. Yesterday we did sell off. Yesterday, my expectation, if you recall, was that it was a slight pullback. I was watching 52.60 as the line in the sand, and then I was expecting it to push higher. It was posturing to push higher. It kept pushing up against these highs. You can see, it just keeps pushing up against these highs in these 52.70 area. Looked at that as a weak high, but it didn't have it in it yesterday. It ended up selling off. Selling off for the session all the way down to 52.10, and then drifting right back up into the open, basically to the prior day's high day. So overall, we managed to tackle and take out the prior day's high day, but we didn't hold on to those prices. The market seems to have a hard time getting back up to 5,300, as you can see here today. I don't know what the SOC is. Looks like, let's find the SOC here. The SOC appears to be, oof, really got to climb up here. SOC looks like looks like 52.68.50, something like that. 52.68.50 or 52.68 quarter. That's the SOC, so that's well above us. We did not retest at all. I mean, we did splash up right before, and then we've just come off. We have not retested or regained that ground yet, and we continue to trend down. So overall, sellers are in control. Pretty good separation between the full session levels, the full session VWAP, and mid. The point of control still at the top end of the range. Might shift down here if we stick around here for long enough to 51.90. It's interesting. We're fighting the 5200 handle right now. 5200 handle, but my expectation is it's very likely to push through here, to push through the 5200, retest, and then you'll end up starting somewhere in this range. Again, a lot of volatility. Sellers have it. Look at the very large lots in control, the auction here. This is OTF behavior. You do not want to fade whatever the impulse is. You do not want to fade it. This is a good day to really exercise discipline with your risk. It's likely to continue to fetch. The market has to reprice, and the market has to reprice, and and your job is to find mispricing opportunities. Here, the May Fed was was pretty assertive that we will not see a change, but June is the one that's really important. And if you look at June, we're at 525. We're at 525 to 550. That's this one. And if you look at June, this was up in the, it was in the 60s. It fell to 57, 56. You can see right here was 61.8, 57, 56, and now 23%. And that's the repricing that's going on right now. And if you look forward, you'll find that the market's much more pessimistic about rate cuts, which means a longer, higher for longer drag on the market, which overall makes it so that it is negative, net negative for risk assets or for stocks. Okay, so that's that. Looking at the bigger picture, I don't have very much time to dig into everything. Looking at the bigger picture, remember this big selling day here. And then we had an inside day. We had an inside of an inside day Monday. And then yesterday we opened higher, and the idea was the most likely scenario is a pullback into 52, 60, 61, and then a push to clean up the rest of the week structure, but it had no interest in pushing higher after the open. It ended up taking out the low, the prior day's low, and pushing almost to last week Friday's low as well, and then finishing higher. So it ended up finishing right in the middle of this balance range, essentially reasserting balance. This morning we've pushed all the way down to below this balance range, and we are below, we went to 51.76 this morning. We're trading 51.94. 51.94 was the low of last Friday. It was that naked close, and so to me, this is one of those situations this morning. If I were here, this is one of those situations where I want to detect as early as possible whether or not participants are seeing prices cheap and are going to push directionally upwards, and bring it back to the 52.45, 52.50 area. Otherwise, you're looking for it to kind of pull back a little bit to just above the 5200, 5210-ish, and then kind of linger at the low, with CPI being the main move in the overnight session. In either case, the market is mispriced currently, and it's trying to find value, so you're going to find opportunities in there. And of course, wherever there's opportunity for profit, there's opportunity for loss, so mind your risk first. You are nothing if not a risk manager. So That's where we stand this morning. I'll leave you with that. I've got to run. Good luck, and I want to announce today's winner. Edge Hunter won the prize, the giveaway, the Trader Bite Out giveaway for Monday. You get $100 and you get 3 months of Edge Pro X for free. Somebody will contact you. The runner up was Neo 7. Neo 7 was the runner up. So if Edge Hunter is unresponsive, Neo 7, you should expect a call or some communication from EdgeClear. These prizes are sponsored by EdgeClear. Go to edgeclear.com for anything you need in terms of brokerage services. Again, congrats, Edge Hunter. The next giveaway will be for today. Be sure to go to the be sure to go to ft71.com/tb-out to enlist yourself for the next prize, which will be drawn on Friday. Another $100, and then Monday we give away MacBook Air worth about $1,200, and that'll be the last Trader Bite we will be together on, and the Trader Bite's being put to rest. Good luck, everyone.